Good morning, Green Room. Okay, I had to shut that other computer off. Okay, so good Monday morning, everyone. Hope you guys had a great weekend. And markets are pretty quiet here this morning. Not too much of a surprise, but hey, we got the next government shutdown coming, lots of earnings coming out, and we'll see what this week has to bring us. Anyway, so the dollar's been going up for the last week or so, and it's up here this morning, and there's, this uneasiness about U.S. China again. How many times we've been through this, and the market seems to forget about it when it wants to go higher, and then when it seems that it's near some turning point, as it is now, based on the weekly charts, our market internals, and so on. So there's this uneasiness now. So now the dollar's moving up, and those that are interested in gold should take note of that, because it doesn't it has an inverse relationship. It's not like lockstep, but gold has been doing well, and I think that has to get the attention of the gold market. So those that are long gold or gold stocks, I want to pay attention to that. And even though things look great here, things could get turned around. So keep that in mind. So with the dollar going up, we see the euro continues to slide here to the downside. So those that are currency traders, you want to keep an eye on this relationship. But now that we've got this greater than 100% retracement, likely to be some stabilization, which kind of leads me to think that, hey, you know what? Maybe we're going to be choppy here for a day or two. And I guess news coming with these talks and the government shutdown and so on, maybe I can never be sure, but maybe it's going to be a little choppy here. Earnings coming out. I think this might be a peak week. There's lots coming here, but we'll see how this unfolds. Right now, just looking at what the markets are doing, futures are up a little bit, but you look at the chart, and there's a side, you look at a minder, any minder. So in the middle of the trading day, and you see, stocks that are up percentage wise on the day, above their open, below their open, so on and so forth. And that's a starting point as to where money's flowing into and out of. And you look at the chart and you say, well, what does that mean in relation to the trend and support and resistance? So even though we see the markets up here, a small amount. One sec, guys. It doesn't mean anything. It's just trading inside of this little range here. So neutral and hourly charts really don't help us much, since we're looking at the same picture, and sometimes you get a different look by looking at the intraday charts or going to the higher time frame chart, such as this. So we see stocks moving up here, having pulled back to an area of support. That blue lines are rising 20 MA above the 50 MA. The 200 is just above. So sometimes what you see happen here, and we use moving averages as our visual aid, helps us speed up the analysis. Okay, leave me alone now. Phone. You see the distance between those moving averages starting to come together. And so anything I can suggest you on how to look at moving averages isn't something that you couldn't determine by looking at price. But again, it's a visual aid. So as you learn to recognize certain pictures of how prices look in relation to those moving averages, they communicate something to you very quickly, similar to using candlesticks. There's nothing magical about candlesticks. You can come to the same conclusions looking at a bar chart, but candlesticks provide a picture that jump out to us as to say, hey, this is a reversal pattern, there's a topping tail, so on and so forth. So now we see these moving averages come together, And what that communicates to us is that the ranges or the volatility is contracting and prices are getting ready to make a move in one direction or the other. Now, right, the $64 million question is which direction? Well, we look at the higher time frame and what the trend is, and we see making lower highs. And it did have a very nice move up, but momentum slowed last week. You know, we've got a small candle body with more of a tail on the top than on the bottom. And so now the question is, can prices clear the high or the low of last week's range? Now, considering the fact that it's in a downtrend, even though it's got a deep retracement, the assumption is it's going to be down. And the market internals that were reviewed last week are in alignment. They, beginning of this week, whatever here, they gave us a sell signal where sentiment and breadth came together, where there were too many stocks moving up. Positive breadth. How could it be bad for too many stocks moving up? Well, historically, when they reach an extreme, we know that markets have turned down, but that in of itself is not enough. We wait until the wrong way option traders actually believe that the market is moving up. So over here, where they believed it was going to crash and they started loading up on puts, over here, they actually believe the market's going up. So they start loading up on an extreme amount of call options, which is bullish bets. And that historically leads to some type of correction. It could be sideways, but in this case, since the trend is down, the assumption is it's going to be down. And now we're waiting to see if prices can break some area of support to confirm what historically we know should happen. Right? Okay. And let me switch here. And so let's look at the other markets and see what they look like. Because we always like to see if there is agreement between these markets. The more markets that are in agreement with each other, the greater the probability of the markets moving in one direction together. We'll always find stocks that are on their own page. They become less so when all markets are moving either up or down, but yeah, it's one of the things we can do to put the odds on our side. So NASDAQ futures, same story, up a little bit, below the 200-day moving average, below last week's range. So last week's high, last week's low. Let's see which way it goes. And while it's trading in between here, we have to recognize that the market is kind of in limbo. You know, to the daily chart, we could assume it's going to go higher. The weekly chart, we assume it's going to go lower because of trend and location. And that is going to lead to some uncertainty between bulls and bears. So anyone bullish looking at a chart recognizes what's happened here. And anyone bearish recognizes what's happening here, but they also recognize that they're fighting the strength in the moment. Leads again to uncertainty, slowing momentum. We're waiting to see which way things are going to turn here. So with that in mind, our bias should be that, hey, we should be a little careful. We always are, but it's not likely that we're going to get big moves in the market until it decides the direction that it's going to take. That being said, you can see that there's stocks down here that are making some moves, so we'll pay attention to those. Of course, this EA here got an upgrade this morning and it popped last week. So that's why we look at individual stocks, even though a futures trader trading the markets might find it a little difficult right now, unless they're a tight scalper because of what I've explained. Whereas stock traders, find things that are moving and things are just fine. And there's nothing wrong with trading both. Dow, same story, right? Same exact thing pretty much, give or take inside the range, up here a little bit, no big deal. Bonds, right? They're neutral here. So are they going to double top here? Are they going to continue to push up? Another market of uncertainty at the moment. Now, let's just take a look at the ETF for interest rates. And you can see how they're coming down here. They're near this prior low. You want to keep an eye on this. I talked about this in the Monday advisory letter, that if these interest rates keep coming down, you're going to hear new fears of an inverted yield curve, which the very shortest of those are extremely close to inverting. And that's where it starts. And that has led to a recession in the past and significant stock market declines. So keep an eye on TBT, see if that continues to go down. If it does, well, you'll hear the media start talking about that again, as they did just before the big drop that started in October. So something else to keep an eye on. Oil inching down here. You can see it's a sell setup on the weekly time frame. It did clear this high and it got a bit climactic there. So now it's got a reversal week, suggesting that it'll move lower. Gold we took a look at. Keep an eye on the dollar. This looks like it's probably going to come lower unless, well, if the dollar turns around. We saw that I explained to you scenario with the euro, but depending on if you're trading here, keep an eye on it. If you're not, well, it really doesn't matter much. You're looking at whatever stocks you're trading or other markets. And with that being said, we got different markets here. Oil, the energy here, we got a sell setup. And this one looks actually one of the better compared to like XOP or XES. So oil stocks look like there's trouble ahead for them. Semiconductors have done very well, but they backed off last week up into resistance. There's a lot of the same pictures at different markets to varying degrees. Aerospace and defense looks great, has done well above its 200-day, but right up against this resistance area. So, no matter where we look, we pretty much come back to the same conclusion that the market is going to be a little choppy here initially. It's looking for direction, whether this upward move can continue or whether it's going to turn back down here. Software, it's been doing well, and financials, right, stalled here. Another sell setup, actually traded under and closed below the prior week's low. Technology's been doing good. Internet stocks been doing good. Now, a little caution here into the beginning of this week. We'll see how things go. And that's it for me. All yours, Dan.
All right. Good morning. Hey, Greg, we're actually, as you know, we're in XOP. And so when you just mentioned XLE, I took a peek at it to see if, we want to short that too. And I thought I heard you say XLE looks, the best to short, and it's bottoming tail on support. Compare that to our XOP, tanked.
No, what I meant by that was it looked the best as far as the least damaged.
Got it. Not as a new short. Yeah.
It should move with the others. It's just a broader ETF than the others are, so they're more stocks, so a little bit more diversified. And
yeah. All right. Well, good. So we're in this. We have a short. We had this breakout failure, big old M top, and a breakdown, and we shorted it last Thursday. It looks great. Tandem covered call looks great. Weight Watchers, we have a covered put, which is short stock, short put, and that looks fine. X, we have a put spread and a covered call. Zulu Sierra, we have a covered call and puts that expire this Friday. That looks great. Urban, we have a covered put. Well, actually, we rolled the puts because remember we were short the 31 puts. And I said, if it closes in the money, go ahead and roll them down to the closest out of the money, which would be $30.50. And we took in an additional 30-cent credit for doing that. Costco, we're still short a call spread. Google, a call spread. Goldman Sachs. Now we have a covered put, so I gave it a little bit more room, but we covered 2/3 of our swing position. Greg did the chart of the week on that. So urge you to check it out. WBA, we shorted on Friday. XLF, we shorted on Friday, closed with a bottoming tail. I'll keep an eye on it to see if we need to leg into a covered put. WWE, I did a chart lesson on this, and we'll look to see if we can sell a put. Huge bottoming tail here, price void on the weekly. And that's it. Oh, Mohawk. We have a put spread pro gap that we found scanning last week. Hey, trader, I wrote down a couple of these from the email you sent me. Your Okta looks good, you know, engulfing bullish consolidation to new highs. It looks good. MDB, it looks higher, all time frames to new highs. It's just, you know, you got to be more careful when they get far from the 20 like that. TPLN, huge move last Thursday. Look at that, percent-wise, up over, you know, $2 on a $5 stock, but it's still a bullish 1, 2, 3. It's just, you know, extended. Your Twilio, yeah, we were in this on this 1, 2, 3. Had a beautiful close on Friday. Now it's gapping up, $4 and change. Looks higher. You just got to find an entry. NVIDIA gapping down in a strong market. So let's see, 146. Where is that? Well, you can just tell by the 15-minute chart. It's gapping. You know, just look at the range from here to here, and it's gapping like, you know, 70%. That might be a call spread candidate. Trip, remember Friday we did, trader asked about doing a put spread over earnings, and I said, yeah, I like it. You could go way the heck to 52s. I'll keep an eye on that. Echo Alpha negated this gap, not in one day, but it's the power of it being negated. 102, it's gapping up though, again, nothing to do with it. SNN, look at this huge reverse heading shoulders, but it looks like an ADR. I don't like those. AWI, I found this in LII. They were mentioned in Barron's, and they both look fine. You know, beautiful uptrends to all-time highs. This one, I don't like those tails as much. But AWI, that's a beautiful little buy setup. That's worth watching. The weekly though, slowing momentum, closed under the week's low, but monthly is a bullish engulfing. So any trade would be short term. C, Charlie, I would love to do a call spread on this. I was going to put it in the letter, but there's no juice on it. But look at that, sell setup, revert topping tails, red bar, resistance, and crack down on the daily with a small upside shakeout. Those are perfect patterns. I'm going to put that in a little window. Oh, and this Wednesday's MT Live, by the way. Oh, earnings tomorrow in Twilio? Yeah, I'm not messing with it. Wednesday, we're going to be talking about trading the open. So that would be everything we do in this room, right? In terms of preparation, bias, focus list, how to enter, and then manage. KSS, we had a call spread on this that we closed at a nickel for 87% of max profit, but it still looks weak. KSS, we'll keep an eye on that. XOP, grimy, did covered put if go, yeah. Yeah, it says, but it's weak pre-market though, so that's good. Gapping down in a strong market, good. But remember, covered puts are just the opposite of a covered call. When we're long stock and momentum slows, selling out of the money call. If you're short stock, momentum slows, shorting out of the money put. What's your opinion on the video? It is a big range bound, so it's kind of hard to tell. Trip I liked. I like trip on the bullish side for a put spread. NVIDIA, it's been lagging. Look at SMH's per NVIDIA. Remember NVIDIA? Look. I think his days are over. Remember, it was priced for perfection. It was rallying here on the crypto news, saying, "Oh, they're building chips for that," and they top out. Target. This is a short idea under the low. Sell setup, topping tails weekly. Alta is actually a put sell.